Hello, and welcome to another update video on Solana. So the Solana chart continues to be in a situation in which we might have started either in the white scenario, the C wave to the upside, which could take us to $249. That is the 100% extension level and an ideal target there for this C wave, or where we could be on our way to higher prices actually in a third wave towards $360 to $380. Okay, so we are still in a situation in which this local uptrend, this local uptrend that started in June, on the 22nd of June, could be unfolding. Please note that the situation here on the daily chart hasn't changed for months, okay? So we've been tracking this rally now for quite some time here from the April low specifically. You might remember that the initial rally was a 5-wave advance, labeled either white wave A or yellow wave 1. Then from there, we had a pullback in either white wave B or yellow wave 2. And obviously from this region here then, from this support area, we would normally expect a B wave or a wave 2 to complete. We had a reaction, and yeah, basically a third wave to the upside could be unfolding now, or a C wave in the white count. Yeah, so this is a support area that both of these scenarios shared with each other. So, and they're still sharing it. So we're still in a range. I mean, I have to say the Solana upside momentum from the last low isn't very, very impressive, I have to say. Okay, so it looks a little weak compared to what some other charts are actually doing. But anyway, we keep an open mind. I'm certainly not tracking the move to the upside as an impulse, but we talked about that, yeah? So for a good reason, I'm not tracking the move to the upside as an impulse. It's rather a diagonal structure at best, which means I don't really trust it. So it means things can easily change, yeah? So this is just important to understand. Whenever we're not dealing with an impulse, but rather a diagonal, yeah, the structure is going to be much more fragile. All right. So let us take a look. Let us take a look at the move to the upside here in a on the smaller time frame. Yeah, what we want to do, we want to take a look at this structure here to see, are we actually forming 5 waves up in wave 1? And before we do that, the next resistance level is here around $186. Yeah. So these previous swing highs, they are very, very important. Okay, so let us take a look at the Solana short-term chart then. Gotta open that. And again, I'm tracking the potential for a 5-wave move to the upside on the smaller time frame. And what you can see here on this chart is that I'm tracking a diagonal structure and how a 5-wave move up would look like. And these 5 waves, so for now, I mean, they could reach this previous swing high around $185, maybe even a little higher. For now, what I'm tracking is a diagonal structure, which might still be in the making. So we have from this swing low in June, a wave 1, a wave 2, A, B. The B wave was a triangle, which is quite special compared to what other charts were doing at that point. And now we could be in a C wave. Now, I told you that it would be ideal for the price to reach the $171 to $172 area in this move to the upside. And we reached 168.50 or something. So not quite there yet, which means that this C wave of circle wave 3 should ideally form another high. It would be ideal. It would just be ideal. Is it an absolute must? No, but it would be ideal. So I'm watching if the bulls show up in this region here, but any break below $153.87 would indicate that there is less upside momentum than what would be ideal. We can still then track that maybe we are already in circle wave 4 and the price just formed a very weak third wave. It's possible, but it's not ideal. So my main support here for this diagonal structure is at $148. Any break below means that the structure is likely breaking down. The there's going to be one more chance to save the diagonal structure, which is at $137.30, because that is the formal invalidation point. Like, support is not invalidation, yeah. It's simply an area where ideally the bulls would show up. So we have $148.30 there as key support. Any break below will mean that we're likely going to test this red line located at $137.30, and that is important because this level is the formal invalidation point of a diagonal structure to the upside. So while technically speaking, we don't normally want diagonals to test the that level, okay, or we don't even want a fourth wave in the diagonal to break below the 61.8 retracement. It's technically possible. So I cannot rule out a diagonal pattern just because we have a deep wave 4. It's technically possible. I'm just saying this structure that we have seen from the 22nd of June low, while it is an uptrend, a local uptrend, it is yeah, it is really a weak let's say a weak local uptrend. Yeah. So yeah, overall, I think we just need to be mindful what the levels are. Be careful. It's not yet a 5-wave move up, and it's also not an impulsive move up. But I am tracking the yellow scenario still, as I said before. But I'm prepared for changes of the microstructure. It's just not. I don't have a high probability setup here. I think that is important to understand. We don't have a high probability setup. A high probability setup would be an AB structure, for example, or let's say rather a 1-2 setup. Yeah, that's the update on Solana. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks so much. Bye-bye. Thanks so much for watching the videos on this YouTube channel. If you've been thinking about joining MCO as a member, now might be a great time. You can use the link in the video description and apply the discount code right below it. You will get 50% off your first month of our Gold membership, and you can explore everything we offer. It's the easiest way to test the membership, see if it's a good fit for you, and get a feel for the community, join the conversation, and I'm looking forward to meeting you in our member area.